We have with us India's Chief Economic Advisor, the man who was the architect behind the Goods and Services Tax and also the definition of a revenue neutral rate, which formed the base of the entire regime. Sir, a four slab structure has been proposed. What is the idea behind these four slabs?
You see, the government made a proposal on four slabs, 10 days ago to the GST Council, and today what has been agreed is that structure with two variations. The centre had proposed a 6% slab for most items of mass consumption. Over and above those that are going to be exempt altogether. That's about 55-60% of the CPI basket. For those, I think the states suggested that, given that many of them are being taxed at 5%, we shouldn't increase the burden on those who consume these mass items. So there was agreement that the 6% slab should come to 5%. The second variation was that the centre had proposed 26% for about 25% of the tax base. The suggestion was made to increase that to 28% and to use the additional revenue that's generated to actually reduce rates on many items that are of interest to lower and middle class people that were proposed to be in the 26% rate. So those will come down, and so middle class consumers will benefit, and some high end goods, which are in any case today taxed at about 30%, they will be taxed at about 28%.
So as far as the Cess structure is concerned, a decision regarding that has also been taken. Could you please help us understand how will the cess be calculated for a particular good, and how should a consumer be prepared to on it?
See, the cess, which is going to be called a cess for compensation, because it's going to be explicitly reserved to compensate the states that lose from GST implementation. So this compensation fund is going to come from 5 cesses. One is the clean energy cess, which I want to keep aside because that's the status quo. But the rest is going to be financed by cesses on 4 products: tobacco, pan masala, aerated beverages, and luxury cars. And the cess on these items will vary, of course, and will be calculated as the difference between what is the incidence today and 28%. Because take luxury cars, there'll be a GST rate on this of 28%. And today they effectively may be taxed at 40 or 41. So the difference of 12 and whatever 13%, whatever it is, will be charged as a cess. That's how the cesses will be calculated.
So also, will the government have to come out with another legislative change in order to enable the transferring of these compensation funds, or are the existing IGST bill and the existing GST bills?
I think all this will be made clear in the legislation. It'll be made. There'll be no confusion. It'll be made explicit on, what these are, what they're for, and so on.
Yes, sir. So also, when we talk of a 4 slab structure, we also hear that there are 2 standard rates of GST. What does this mean? What is the idea behind having 2 standard rates of GST?
The standard rate essentially is the rate at which it's kind of the default rate. Supposing there's a product which has not been explicitly earmarked somewhere, the default will be it'll be charged at the standard rate, and the standard rate also means that it's those rates at which most of the products are charged. So that's what a standard rate means.
So when the government comes out with 2 standard rates, can we say that 12% is for X category of goods and 18% will be the standard rate for luxury goods? Now,
no, I don't think that's the way to. It's more nomenclature. I don't think one should get too hung up on that. But basically, that what is the default rate, and this is the rate at which most items are taxed. A majority of the tax base is in these 2 items.
So as far as luxury goods are concerned, is there a roadmap? Is there a one-size-fits-all approach that can be taken, or will each and every category and each and every...
all of them will have to be fitted into the cess or the 28% category. So they'll all be fitted in there.
And so, how would a luxury good be defined?
It's pretty much going to track what the rate is on those goods today. So that's how it's going to be decided.
Now, so one last question: will branded goods also be categorized as luxury goods?
No, see, there's no distinction that's going to be made between branded and unbranded goods. I mean, there are goods that are deemed to be consumed more by certain people, and that's already reflected in today's tax rate. So it's just going to be made sure that those goods are in those tax rates, tax brackets.
Thank you so much for speaking to Bloomberg Quint, sir. Thank you.